it's 12. I guess we should start now. First of all, thank you for spending your time during your lunch hour to enjoy us in this webinar, especially today is a Friday. Just a quick note, if you have any question, please place your question in the Q&A box down below, and we're going to have a Q&A session after the presentation, so we're going to read out the question at the end. So today we're very honored to have UniAsia Group with us. We have Mr. Lin Kai-ching, the CFO of the company. So UniAsia Group and its subsidiary is an alternative investment group specializing in creating alternative investment opportunities and providing integrated services relating to such investment. The investment targets are mainly cargo ships and properties. The group also have extensive know-how and network relating to such alternative investment and provides services relating to these investment. So the group is listed on the main board of Singapore Exchange in August 2007. They have offices in Hong Kong, Singapore, Tokyo, Shanghai, and Guangzhou. Just a short outline of the session today. Mr. Lim will be sharing with us the introduction of their UniAsia Group, their corporate updates and financial highlights, and last but not least, their project pipelines, outlook, and growth strategies. So without further ado, let me pass my time to Mr. Ling to start his presentation today.
Yeah, thank you, Helena. Can you all hear me? Okay, right? Helena, it's okay, right? Okay, good. So I'm going to share this screen. So good afternoon, everyone. Thank you for taking the time to join us in this webinar. My name is Lim Kai-ching. I'm the Group CFO of UniAsia Group Limited. And I'm sure most of you have been following us for a while, and thank you for your support all these years. So this is the presentation deck we have released on 29th of February 2024. And the table of contents basically is a corporate overview, FY 2023's financial results, as well as business updates. Now, for corporate overview, like Hanina has mentioned, I think most of you are familiar with us, so I'm not going to go into details. But I just want to touch on a bit on our business models because it pertains to some of the development we had in FY 2023. Just to reiterate, our business model basically is to, first step one, acquire assets and of course we hope is a competitive price, and we provide client solutions relating to such assets. And we focus our assets on ships as well as properties. And we have expertise in providing ship or property finance arrangement, sales and purchase brokerage arrangement, or even the recurring rental or charter brokerage arrangement. And thereafter, we manage or operate these assets on a recurring income basis. So if you see our list of ships that we have, that is actually on stage 2. But ultimately, we have to move on to stage 3, which is to dispose of assets that we can dispose based on the market price that's favorable, or we think that is favorable to us, and therefore increase the returns to our shareholders. And also in the process, we try to, of course, get recurring income from charter income administration fees, as well as ad hoc fees income whenever we have the opportunity. So please bear this in mind in our business model, and I will touch on this further in the slides later on. So the two main sectors, as I mentioned, are shipping and properties. And let's move on to our financial highlights for 2023. So after a very exceptional year in FY 2022 and also 2021 due to COVID-19, the shipping market has sort of normalized. And due to the normalization of the shipping market, and we actually have a profit of $5.1 million US dollar. Now, we all know that during the COVID-19 period, there are some exceptional factors such as port congestions and so forth. The charter rates were going through the sky, and therefore we were able to achieve a highest profit in the group's history of 28 million. But now that the charter rate has normalized, I think our current profit is a reasonable amount. And taking this opportunity, we have also start to dispose our oldest vessels, okay? Because the charter market, although it has come down, the second-hand price market remains strong. I will touch on this a bit further in our slides. Okay. So if you look at our profit, FY 2023, that is around the level 5-6 million as compared to FY 2019 before the COVID-19 pandemic. FY 2020, of course, is the start of COVID-19. And thereafter 2021, 22, we have an exceptional profit. So you can see when we say it is sort of like normalized, I think this will be the level that at least we hope we can achieve a profit. But of course, we believe that with our initiative, we could achieve more in the coming years. So as a result of our profit for full year, we are declaring a final dividend of 2.2 Singapore cents per share. And together with the interim dividend that we have already paid in 2023, the total dividend for the full year stands at 4.4 Singapore cents per share. So that represents around 50.6% of the payout ratio of 2023's profit. Now, this payment will be done on the 31st of May. And as you all know previously, our belief is that we would want to have a sustainable dividend for our shareholders. So when we assess how much dividend we want to pay, besides the current year profit, we also look at the opportunities for investments for the group, like any responsible company management should do. And to ensure that even in the bad times, we are able to pay out a decent dividend for our shareholders. So if you look at our dividend records, even in years when we are making losses, we do pay out dividends to our shareholders. So therefore, during the very good years, we will not pay out, and we will try to pay out a good dividend, but not so much such that we are not able to sustain it in the years ahead. So therefore, for current year at $5.1 million of profit, we are paying out a total of 4.4 Singapore cents per share. So that's the thinking behind how we derive these dividends per share. Now, if you look at our balance sheets, our balance sheet actually now is in a much better position than we were, say, 5-6 years ago, when the shipping market was doing very badly. Now, our total asset stands at $211.6 million. Total liabilities have reduced by $22.8 million. So total equity still stands around $149 million. Debt has reduced. Cash is still strong. And our debt to equity ratio is very low. So we actually have a very low gearing ratio. So if you look at the makeup of our balance sheet, current assets is 3 times more than that of current liabilities. Okay, so we do have a very low liabilities as compared to our assets, and our debt equity ratio has been reducing over the past few years. Now, total assets wise, 58% of our total assets pertains to maritime assets. About 16% pertain to our property investment in Hong Kong. About 6% pertains to investment in Japan, and the balance are in cash or cash equivalent. So in terms of cash flows, okay, so I'll touch on cash flows and borrowings. I think these are two of the most important or critical information when investors analyze our assets. Basically, we have always received feedback from investors. How strong is our cash? Whether we are able to meet the obligation of our borrowings, where we have trouble when the interest rate goes up, or whether our assets quality or valuation will drop such that we will receive call from the banks. So the next few slides, basically, we have prepared for the past few years to address this concern. So if you look at our cash flow statements, $19 million of operating cash flow were generated for FY 2023. So if you recall, our profit has dropped from 28 million to maybe 1/5 to $5.1 million. But if you look at our operating cash flow, it is only about half from that of FY 2022. Now, most of the cash outflow pertain to financing activities. So if you look at the notes on the right, the main items for financing activities are basically repayment of borrowings, as well as the payment of dividends, our final and special dividend for FY 2022, as well as the interim dividend that we paid in 2023. So all those are captured within the cash flow movement in FY 2022's financing activities. So as a result of all these main items, the net cash outflows for FY 2023 was $8.9 million. So now we have $38 million as at end of the year. 2023. So how does that compare to the previous years? Now, if we look at our net cash flow, our cash balance at the end of the year. Now, in 2019, at that time before COVID-19, we actually has a hotel operating business within Japan itself, which we disposed of in 2020 when the pandemic hit. So if you look at December 2019, actually much of the cash in this 56 million also pertains to the hotel operating business, which we have already disposed of. So at the end of the year 2023, the balance of 30 plus million US dollar actually sits very well. So we do have a very strong cash flow at the end of the year, ready for any new opportunities that we may have. And in terms of the operating cash flow wise, of course, in 2021 and 2022, like I mentioned, again and again, it is exceptional years. But for 19 million of operating cash flow, we think also it is a very comfortable level at this point in time for us. Now, in terms of borrowing wise, since 2019 or even earlier, we have been continually paring down our borrowings. Now, our borrowings are mainly for ship investments as well as two borrowings for our property investment in Japan. So for ship investments, ship-wise, the wholly owned vessels, as we receive charter, part of the charter will be used to pay off the principal of the loan, very much like how you used to pay for your housing loan. So at the end of the year, we have a total of 55.6 million US dollar of borrowings, of which 46.6 pertains to non-current level. That means we have to pay off, in 2025 or after. Only 9 million we have to pay within the year of 2024. And in terms of total financing costs, of course, for the past few years, it has been reducing. But in FY 2023, we see an increase from 2.8 million US dollar in FY 2022 to 3.7 million US dollar. But if you put this in perspective, we all know that US Federal Reserve rates has increased by more than 100% from FY 2022 to FY 2023. But our increase is only 32%. So that mainly is due to our effort in paring down our borrowings over the years, especially in the years when we were doing well. So our total borrowings now 50 million, okay, of which those pertains to ship collateralized by ship assets, of which 41.7 million are non-current and 8.8 million are current borrowings of this 50.5 million US dollar. Now the assets on the books being used to collateralize for this borrowing stands at 121.1 million US dollar. So you can see the asset for our ships, the value really have to drop dramatically for the banks to call on our borrowing. So we really have a lot of headroom. Now, in terms of our property borrowings, it only stands at 5.1 million US dollar, which we can easily cover by our cash or operating cash flow. But notwithstanding this, the two borrowings for these property assets pertains to some SPC that we consolidate into our group accounts, and these are non-recourse borrowings. That means if there's any unfortunate events that we have to default, it doesn't have to go to the group. But notwithstanding this, the book value of assets being used to collateralize for this borrowing stands at 7.5 million US dollars. So we also have a very good headroom. And these are borrowings in Japanese yen. And as we all know, the Japanese yen's interest rates are very low. So in total, our borrowing is actually in a very comfortable zone. We have strong assets to back our borrowings. We have strong cash. We have strong operating cash flow. So let's move on to our business segment profit. Shipping wise is still leading the group for FY 2023 at 10 million US dollar. Property, we have Hong Kong and Japan. And for Hong Kong property, I will touch on later. And it's not doing very well. Therefore, we have taken a 2.1 million US dollar of fair valuation loss, resulting in this net loss for the property segment. So in total, the group's profit 5.1 million US dollar. So shipping, led by our ship owning and chartering, stands at 7.5 million US dollar from ship owning and chartering, and for maritime asset management, 2 million US dollar. Okay. So ship owning and chartering. The charter income, of course, has reduced by 43% as it normalized. And we have, like we mentioned, we have sold off one of the vessel. So the gain on disposal of 2.3 million and a reversal of impairment of 1.15 million was actually recorded under the expense line. And as a result of all these factors, the profit after tax was 7.5 million US dollar. So I will spend a bit more time on our ship owning and chartering business. After the stellar performance in 2022, 2023 seems quite low as compared to 2022. But if you were to focus on 2023 itself, okay, this rate of Baltic Handysize Index is actually quite a decent number. And when it comes to early part of 2024, actually it was actually higher than that of the average of 2023. So in general, the market is expecting a better 2024 compared to 2023. But then now, if we were to look at the dry bulk trade demand, for the past few years, we have been saying that the rate of growth of demand is actually slower than that, is actually higher than that of the rate of growth of supply. But for January's dry bulk trade order trade updates that we see from Customs Research, there seems to be a little bit of higher supply growth as compared to demand. Notwithstanding this, Massoff, another research company, has a separate view, saying that the demand will grow by 2.7 as compared to the dry bulk fleet growth of 2.4. So there's all this, mixed signal. And why is that? Okay, but so in terms of supply side, we are still seeing a rather healthy supply growth in the coming few years. Okay, now the shipyard mainly are filled with orders from big container ships, tankers, and bigger dry bulk carriers. There are actually not many orders for small handysize or even for dry bulk carriers in general. So this is like a 20, 30 years low in terms of supply coming into the market. Demand-wise, last year, actually China's demand for coal has been very strong. Some of the weaker demand actually was from Europe and US. But we do expect perhaps a better demand growth this year, hopefully. Notwithstanding this, the supply-wise of the ships into the whole global system is also expected not just to be affected by the shipyards, but also some other factors, including, as we all know, the Red Sea issue of the attack during the passing of the Red Sea. So as a result, vessels have to pass through the longer route of Cape of Good Hope. That actually increased, okay, the sailing time of vessel and therefore increase the turnaround or reduce the turnaround time of vessels, okay, therefore reducing the supply. Also, the IMO have requirements for vessels to have a slower speed so as to reduce the carbon emission. That also take out some supply from the market. So all these positive factor we see from the supply side is expected to help to boost the market factor further. So we can see, if you see this chart at the fourth quarter of 2023, our average charter for our vessel has actually increased as compared to the Q 2023. So if we look at our average charter for all our vessels, it has reduced in 2023 now to more than 10,000 for 2023 towards end of 2023, and hopefully for first Q of 2024 it will increase further. And on last year we sold our oldest vessel that's built in 2007, a 29,000 deadweight ton vessel. And we book a gain of 2.3 million US dollar for these sales, and the cash proceed of 7.5 million was added to our cash float. So I guess at this point in time, you may be wondering, if the market were to be as good as what I say, why are we selling some of these vessels? So if you recall last year, at the beginning of the year, we have 5 29,000 deadweight ton vessels and 5 38,000 deadweight ton vessels. The 29,000 deadweight ton vessels are actually older built. This is the oldest one that's built in 2007, and in the beginning of 2024, and this deal has been closed. The contract has been settled. We have already received the proceed, and it was done in early 2024. So these two vessels are the oldest of the group's fleets, 2007, 2009. After COVID-19, as the rate start coming down, The 38,000 deadweight ton vessels actually are able to fetch a much better charter rate per day as compared to the older 29,000 deadweight ton vessels. Of course, 29,000 because it's smaller, they are older, okay, so they are not able to command as good a charter rate as we hope for. So most of these vessels that we have on our fleet, the rate per day for 29,000 deadweight ton vessel average less than $10,000 per day. On the other hand, our 38,000 deadweight ton vessels, we are able to average 12 to 13 or more than that every day. Okay, so in other words, we are able to get very good profit from our 38,000 deadweight ton vessels, and some of these 29,000 smaller vessels were actually dragging down the performance of the group. Now is a very good opportunity because of the shortage of supply coming into the market. There is still a strong second-hand market for these older vessels. Who are the buyers? You know, it could be some shipping line. They need the vessels regardless of the market to ship their own goods or for their clients. So there is still a ready buyer for second-hand vessels, but not necessarily the charter will reflect that. So we see this mismatch and took the opportunity to dispose of these two vessels. And after this disposal, okay, if you look at our fleet here, from number 4 to number 8, those are 38,000 deadweight ton vessels. And as you can see, they are built much later from 2013 to 2016. Whereas number 1 to 3, they were built in the years 2011, 2012, or more than 10, 11 years old. So these older vessels, of course, they cannot fetch a good charter rate. We will find good opportunity to dispose them when there's a good chance. But to dispose vessels, okay, our policy has always been we need to meet two criteria. One, the proceeds must be able to cover the net book value such that it will not result in a loss from the disposal. Two, the proceeds must be able to cover the borrowings so that there's no net cash outflow when we dispose these vessels. So these are the two criteria that we want to monitor. So as we hold the vessel longer, of course, there's more depreciation, net book value becomes lower, and borrowings become lower as well. So these are some of the things that we monitor, and we have to take steps, in order to dispose of the vessels. To sell off a vessels is just like how you sell a house. You need to decorate your house, make it look nice, have an open house, people come for bidding before you can sell off your house, or people come and put in a bid. The same thing for the vessel. Before you can even ask for potential buyer to come and take a look at your vessels, you may have to touch up the ships, do some minor repairs before you can put them up in the market. So we do need some preparation if we were to dispose of these vessels. So maritime asset management, next I move on to maritime asset management. This one pertains mainly to our joint venture vehicles. We have no arrangement deal closed during the year, but in terms of investment returns, we have received the proceeds from our 49% owned JV structure, which the vessel has been disposed of. We received all the proceeds, as well as some dividend from our 18% owned vessels. So if these are the fleets of the 18% owned vessels, okay, so 18% owned by us and 82% owned by our joint venture partner. Now, these vessels are commercially and technically managed by us. Some of you may ask, after disposal of the vessels, will we look for opportunity to purchase new vessels or some second-hand vessels in order to help to boost our chartered income going forward? Because you sell off, your chartered income will drop. That is very true. But if you were to sell at high and go to the market to buy now, the prices may be high. So one option that we have and we are studying is to take over some of these vessels within our joint venture from 18%, and to become 100%, because we know these vessels since the date of delivery. And like I mentioned just now, when you want to buy vessels from the markets, you have to go through a bidding process with other potential competitors. As a result, the prices that you pay could have been driven up through the bidding process. But if we were to buy vessels from our already portfolio, we could have negotiated a much better price so that it can be consolidated in our books at a much lower net book value. So this is an option that the group has that's unique to us, not available to other players. Okay, so don't be worried that we sell off the older vessels. As you can see in this portfolio, the vessels are newer, they are much bigger, 38,000 to 58,000 Supramax. So, and even the number one vessels have scrubber being fixed onto the vessels. So we do have opportunities. We do have some potential that's unique to us that we are also studying. Okay, maritime services, I will not touch on that. This is not very significant. Next, I'll move on to our property investments. I think this is also an area that many of you will be very concerned. So our Hong Kong property projects in the year 2015, 2016, when the shipping market was not doing very well, the Hong Kong properties were actually churning out very good returns for the group. Our project number 1, 2, and 3 has been exited by the group in previous years and has given us very, very good returns. You know, every $1 we put in, we can get back 2 to 3 or even more than that over the past few years. However, as we all know, Hong Kong is now going through a very difficult period, especially the property market. After the protests, after COVID-19, the Hong Kong property market has really become very, very slow. Adding to this is that US dollar interest rate has gone up. FY 2022, as I have mentioned, it has gone up more than 100%. US dollar has become very strong. Hong Kong dollar is pegged to US dollar, as we all know. And as a result, renminbi becomes weaker as compared to US dollar. So this is the reverse of previously, when the renminbi was stronger than US dollar. US dollar interest rate was low. So a lot of mainland Chinese businesses, they are able to come to Hong Kong, buy a lot of Hong Kong dollar and buy a lot of Hong Kong property and pay very low interest. And now it's really the reverse. So the Hong Kong properties that we have, number 4, 5, 6, and 7, the construction has been completed. Number 8 is still under construction, expected to be completed towards the end of this year. And we can see that for number 4 project, the sales are actually moving very slow. Okay, and also for number 5, number 6 wise, we can see they have maybe a better sales, although it's completed later. The construction was completed later. Similarly, for number 7, it's slower, and number 8, actually, we do have quite a good sales. The reason being, for number 6 and number 8, they are actually properties located in Changsha Wan, and the rest are actually located in Tsuen Wan. So, to put in perspective, Tsuen Wan is very much like your Woodlands on MRT map, and Changsha Wan maybe is like Toa Payoh or Ang Mo Kio in terms of the Singapore's MRT map. So being more centralized, number 6 and number 7 tends to attract more interest, whereas the Tsuen Wan projects tend to be slower. Notwithstanding this, Tsuen Wan is actually closer to China, closer to Shenzhen. So there are thoughts that towards the later part of this year, if US were to reduce the rates, US dollar could weaken against renminbi. Hong Kong interest rate could go down, and that could potentially drive up the demand for some of these commercial properties. We all know that the Hong Kong government has removed all the residential cooling measures. We have seen that the residential projects demand has gone up. So now we are waiting to see whether some of this demand could spill over to the commercial property project. But notwithstanding this, you know, because of the current market situation, we have taken a 2.1 million valuation loss from the investments that we have. So what is our exposure to this all these Hong Kong property investments? We currently on our books we have about 30 million US dollar of investment sitting on the investment line of our books. After these 2 million impairment or fair valuation losses that we have taken. We have taken more fair valuation losses, maybe this year, maybe next year, if the market does not turn out well. Will it affect our cash? The answer is no. We do not provide any guarantees. We do not intend to put in any more investments into this investment. So what I can tell you is this is a maximum loss. 30 million US dollar is already sunk cost, the cash that we already put in. We are monitoring the situation very closely. We're working with our partner very closely to dispose of this vessel. But the maximum in terms of P&L that we could take is 30 million, which we think we can sustain it. No cash output, no impact on our cash. Okay, then next I'll move on to our property investment in Japan. Japan is still a very good business area for us. As we all know, our management, many of them are Japanese. We have a Japan property arm in Tokyo, which has a property asset management license. So we have our trademark Alero projects, which we buy land in Tokyo, redevelop them, and sell en bloc. And these are the pictures that we have. And in terms of this project, if we were to hold them, consolidate in our books, and we hold them for rental, we will classify them as investment properties for accounting purposes, and that sits about 7.5 million US dollar on the face of our balance sheet. And we hold 50% of more, that means we consolidate with the objective of develop and sell. We will classify them as properties under development, and we have sold off all as at the end of the year. Currently it's 0. And if you hold less than 50%, we don't consolidate, we just record them investment returns. Those are 2.8 million on our balance sheet. So 10 million of exposure to this small residential property development. So for the properties under development that we have sold, okay, basically we sold 3 of them, and then the expense is recorded here. So therefore we have this 12.1 million US dollar of proceeds from sale of properties under development. And as mentioned, we have a property asset management license in Japan. So our total asset under management now stands at 38.7 billion US dollar. And some of the new assets that we started managing include solar plant. Okay, so these are new assets that we start to manage in 2023. Now, with these new assets that we manage, we could potentially gather some expertise that's open the door for our own investment in the future. So these are some of the possibility that we are looking at. And of course, we, as announced in November, our second private finance initiative project came on. Okay, so we have won the bids by Kuki City government in Saitama Prefecture in Japan. So this is the second project that we have. So how this project works is that the government of the respective prefecture in Japan will give out this contract for consortium to bid. So the winning bidder will develop this project. Then the government will take over and lease to this consortium to operate for a period of 20 years following the completion of the project. So the consortium that's led by Uniasia Capital Japan is responsible for development. So we earn some fees in the process. And for the next 20 years, we will be earning a fixed recurring income of asset management fees for managing this project for the next 20 years. I would say that the fee-wise is not a very significant amount, especially when you translate that back to US dollar. But with this experience, basically we guarantee a recurring income for next 20 years. And this is our second project. And the reason we can get the second project is because of the success of the first project. And with this, we are potentially looking at more and more of such projects in our Japan portfolio, and thereby increasing our asset under management and also increasing the recurring income that we have. Okay, so the next few slides pertains to some of for the land project I have mentioned in my previous presentation, so I won't go into detail. The next few slides pertain to our community work that we have done. So I also will not go into that in detail. So I see that there are quite a few questions. Maybe I can address some of that now. Hanina, I'll just proceed to read out the question.
Yeah, sure, no problem.
Okay, so maybe the first question, what is the wait period if you order new dry bulk carriers? For shipyard now, most of them are full. So when you place an order now, the lead time is at least 3 to 4 years. So you place an order now, you can only get a delivery in 2027 or 2028. So this is the lead time you have to wait. And because of this lead time, and the ever-changing environmental requirements. Therefore, many owners are hesitant about placing order for new ships. Because as you can imagine, if I place an order for new ship now, it will only be delivered in 2027, 2028. The environmental requirement could have changed. I may have to put in additional money to fit the ship to meet the requirement. That's why many ship owners are hesitant. They're also wondering whether they should place order now. That's why the supply is coming in is low. And also, now there's no standard. The technology is not there for a really environmental friendly fuel. Fossil fuel is still the main dominant fuel for ships. Of course, there are people who say methane, methanol, and so forth for dual fuel engine. But none of them can actually wholly replace fossil fuel at this point in time. It still have to be a dual tank. Imagine your vessel is in the middle of the ocean and you are running short of fuel and you need to refuel them, and there are no infrastructure that's nearby for you to refuel. So that's one of some of the main problems that the shipping industry is now facing. Okay, so what is the price difference between new and second-hand vessel? How large is the difference compared to the past? Okay, so for new vessel now, let's say if you are looking at our 20 plus, our 38,000 deadweight time vessel, new one, if you place an order now for a brand new one, you will need about 30 million US dollar. Okay, so 30 million US dollar, previously when we purchase our vessels, we purchase it in the low 20s, 22, 23, 24 million US dollar. And even then, some of the vessels, we have to take certain impairment loss when the market was down. So right now, the new vessels, we are talking about 30 or even 30 plus million US dollar. So you can imagine that this is indeed very high. Now, in terms of a second-hand price, accordingly, it becomes a bit higher than what it was previously. And it's always a moving price. Every day or every week, there will be some published price of what the transactions being done. So your second-hand price, say for our older vessels, the latest one we were able to sell it close to 9 million US dollar for a ship that's built in 2009, and it's 29,000 deadweight ton vessels. So we think that this is still a very relatively good price. Our net book value on our books is less than that. That's why we sell it. So I think if you ask me what's the real price difference, it really depends how you see what's the value of it. But definitely we think that at 30 million US dollar or more for a new vessel is really not worth it. It's too risky for us. The potential loss that we may have to take when the market goes down could be quite high. Okay, then I'm surprised your interest payment have increased. I mean, the interest, the loan are actually all in US dollar. Okay, so if you were to borrow more in Japanese yen, which is weak, and then you go and buy US dollar, which is small, you need more Japanese yen to buy US dollar. So it doesn't work that way, right? So you may be paying, okay, so let me reread the question. What currency are your debt denominated in? Okay, I'm surprised that your interest payments have increased. What currency are your debt denominated in? Can you give a breakdown? And why don't you borrow more in Japanese yen and less in US dollars since Japanese yen rates are low? So I have mentioned, if you look at this slide, okay, the ship borrowings, 50 million are all in US dollar, and the property borrowings are in Japanese yen. So you need to match your currency of your proceeds versus the payment of your borrowings. So our vessels proceeds are in US dollar. Of course, we can borrow in Japanese yen, but if you borrow in Japanese yen now, okay, you need to borrow more Japanese yen because in terms of US dollar, to refinance it, you actually convert back to a smaller amount of US dollar. So the interest rate parity in economic sense don't give you that kind of arbitrage opportunity. Okay, there will not be such arbitrage opportunity. I mean, if you are familiar with finance, you know that. That is the reason why when the interest rate goes down for Japanese yen also become very weak. There's no way that the Japanese yen can be strong and the Japanese yen interest is very weak, and you can take advantage of this arbitrage because so many people will go inside and weaken the Japanese yen. So we have to therefore match the US dollar with the currency that we receive the proceeds from. So 50.5 million are US dollar borrowings, 5.1 are Japanese yen borrowings. Because the 5.1, we will receive the income in Japanese yen, we'll pay off the loan in Japanese yen. So that's the reason why we cannot borrow more in Japanese yen now, especially now, and convert to US dollar and try to use that to finance our existing US dollar loan. Okay, because it's US dollar borrowings, the interest rate therefore will go up. Our borrowings, we pay variable rates. That means using SOFR, okay, as a variable because it replaces LIBOR, plus the margin. And all our margin, we have been able to negotiate it to be less than 2%. So you have taken your own housing loan. You will be familiar when you borrow from the banks for your house, you will be able to get a lower margin over the variable benchmark rate. It is very tough, very tough to negotiate with the bank. So we have a team of professionals in Hong Kong working on this, and they managed to get very good rates when we refinance the loan. So we are always looking for opportunities to see when the time is right to refinance it. And I think because of the variable rate that has increased, of course, our interest payment will increase. But do note that you only increased by 37%, but US dollar rate has increased by no more than 100%. Previously, it was 1-2%, the variable rate plus margin. Now is 5-6%, okay, for variable rates. The increase is huge. So please put that in perspective. Okay? So I hope that answers your question. So what can drive dry bulk freight rates with such property market in China? China is, okay, so I'm not sure if you know, China actually has the biggest coal-powered power plant in the whole world. China has more than 1,000 coal-powered power plants. And the second is India, which is like, 200-300. Okay, this is something you can search on the internet, you can find. More than 1,000 coal-powered power plants. And in order to fuel all these power plants, they have to get coal from all over the world. And coal is one of the major driver of commodity freight rates. So that's why last year, China demand for coal, it is still very strong. And on top of that, notwithstanding the property market, which actually the China government can control if they want to, but if you look at what they have been saying and what they have been doing, they really want to focus China into diverting their energy towards more constructive production. They want to compete with US on IT, on technology, on EV. They cannot have people, just making money sitting there, from capital returns from the properties, from rental income. That's why I think China government is aware of that, and they are not in a hurry to support the China property market. Notwithstanding this, there are still many rural areas in China that requires infrastructure building. And the China government is committed to making all this infrastructure building, which then requires steel and commodities in order to build them. US itself is also wanting to build a lot of infrastructure refurbishment for their own country. That also potentially will drive up the demand for commodities. So not just China, I think overall the demand for commodity is still there. You can't really ship most commodities by airplane. You still have to go through ships. That's why we focus on dry bulk markets. Okay, so hope I have answered your questions. The next one, have missed your earlier slides. So what is the percentage of shipping and property business respectively, and has the percentage remained the same for the past few years? Is it the level you are maintaining for the next few years? Okay, so shipping wise, traditionally, our wholly owned vessels is to churn out recurring charter income. Our property investments are mainly for capital returns where we recycle. Hong Kong property really is unfortunate. Nobody can foresee that Hong Kong can be so bad. Like I mentioned, we have 30 million. We would have hoped that this project could have been sold once the COVID-19 restrictions were lifted. We didn't expect the interest rate to go up so drastically. I think nobody had expected that. We didn't expect the Hong Kong property market to be so slow for so long. So I think that is something that is beyond our expectation. We can be very honest with you. I think if you ask any players in the Hong Kong property market, they can tell you the same thing. So that is the element that is missing from our P&L for the past 1 or 2 years that we were hoping could have contributed to boosting our P&L. So if you take out these 2 million of fair valuation loss that we've taken, our profit this year will have been 7 million. And if we have made some gains from the Hong Kong property, it could easily reach a 10 million profit. So I think currently our issue really is the Hong Kong property market. So we don't really focus on, in terms of percentage from the revenue or profit point of view, but from the assets point of view, what could they generate in terms of recurring income, in terms of capital return? Yeah. So the Hong Kong properties are completed, what percentage? I think those information are in the slides, all the respective projects. We do have that information in the slide, so I will not go into that. Is there a risk banks will ask for additional equity on your Hong Kong property project? That is a very good question. I think at this point in time, based on our understanding, those loans, some of them will be due this year. Our consortium partner has prepared cash, which they claim they are able to meet the demands. That's why we only have taken $2 million of fair valuation loss. We think that yes, the risk could be there, but we also do not want to be overly cautious and take on too many valuation loss. So once again, I want to say that Hong Kong property is something that we do monitor very closely. We are aware that there could potentially be an issue, but yet again, they could potentially turn around very quickly and add on to our P&L in this year. Okay. The next question, who have been the typical buyers of the Hong Kong property project? They are not returning to the market. The typical buyers, the biggest players are the Chinese business. Okay, there are many Chinese companies who used to come Hong Kong and buy a few floors and have the naming rights of these buildings. Like I mentioned, the main reason then was the renminbi was weak vis-a-vis US dollar. Interest rate in Hong Kong was low. So the stronger renminbi can buy more Hong Kong dollar, and then they can borrow more. And they are ready to buy, many floors of the Hong Kong property, usually as a base for exporting of their goods. So we are seeing some of these businesses not there. Are they affected by the property problem in China? Maybe, maybe not. We are not sure, because these businesses may not have exposure in the residential property market. We all know that the main problem of China's property are the residential property. So some of these businesses may not have exposure to residential properties. And ours are commercial and industrial property. So I think one of the main reasons would be the renminbi issue, the exchange rate, US dollar exchange rate with renminbi, and also the interest rate. And if these can be improved in the second half of the year, potentially the demand may come back. Okay. So is uniasia a good buy at the current price? I can't tell you that. I'll let you have your own decision. Okay, my job is to explain to you, tell you the good and the bad of our company. I've been doing this for many, many years. I will not tell you that only the good things. I will tell you the good and the bad of our company. And the decision whether it's a good buy or not is really up to you. Okay. Do you think it's worth to enter into Hong Kong property investment? Do you have a plan to exit? We do not want to invest further from what our exposure. Our exposure now is 30 million US dollar. We don't want to increase any more exposure to the Hong Kong property market now. So no, we will not enter into Hong Kong property more until we have got back some of our capital. This is part of our risk management process. Our plan to exit really is, because this is a consortium that we invest in, you really depend on our partner. Of course, we can put in more cash to buy out some of the units. Because when we were to buy these units, we have to buy them at market value. But is this something we want to do? We could do it, but like I said, we don't want to have additional exposure into this property. So at this point in time, our main exit plan is to wait for our partners and work closely with them to see how they can dispose of this project in the market. I think if we can hold it on for the next 1 or 2 years, the demand should come back into Hong Kong, at least for the commercial and industrial building sector. Okay, can you give a demand for shipping business in terms of country and region? Okay, this is a very broad kind of question. Can you give breakdown of demand for shipping business in terms of countries or region? Now, we are ship owners, so we charter our vessels to shipping line. Our clients includes like Pacific Basin, and some other global shipping line around the regions. Some of them are in Middle East, some of them are in Europe. They could be all over the place. And when we lease to them, really depend on the rate and whether they are reputable. So regardless of demand for shipping business, because it's really why I really don't know how to answer this question, because shipping can be container tankers. Dry bulk itself have different size, different region. The different region has different demand profile. So I'm not sure. I'm sorry, I can't really give you a satisfactory answer to your question, give a breakdown of the demand. I think these are a lot of shipping research report that you potentially can read them. Okay, if you have some gross debt, the next question, if you have some gross debt and some gross cash, such that the net debt is relatively small, however, you are paying quite a high interest on the debt and earning practically zero interest on the cash, why not just pay down the debt with your cash? First of all, I think the cash wise, we do have some cash that we are earning interest, and we do use the cash to recycle for our investment in Japan. We are still actively buying new investment every day. We are still doing new projects. If you see the percentage is quite low for Japan investments because the capital has been recycled. So some of these cash are ready for potential investments. To pay off all the debt now, whether is it a good time, I think this is also something that we consider. We have done that for the past few years, but should we pour in all our cash to pay off the debt? I think we still have to wait and see. We all know that the interest is going to come down. Everybody knows that it's going to come down this year. If I were to pay off our note now, the bank's debt now, and then the rates comes down, I think the investors will also blame us for that. So at the current cash flow, we think it's a comfortable area level that we can meet our operating demand. If you have not much cash in your balance sheet, that is also not a good sign for the bank itself. So I think at this current level, it is a level that we are quite comfortable with. Okay. How many Alero projects are available? So this is the next question. How many Alero projects are available for sale this year? Sorry, maybe I have came off quickly. So at the end of 2023, we have 11 projects on our books, including those that we have a small stake that's not consolidated in our books. But we have new pipelines of projects. Every other weeks, I'm seeing new papers to seek approval. I see in the committee which approve the investments. So we do have a lot of new projects this year. And we also have new business initiative, including those pertaining to more sustainable projects, such as group homes. So I think the pipeline of project in Japan is still very vibrant, and we have many opportunities. The new CEO has came on board on the 1st March, and one of the key objectives is to see how we can rebalance our assets towards having more Japan exposure. Because we are familiar with Japan, because there are still a lot of opportunities within Japan itself. Mainly, of course, in Tokyo, but also there are some other opportunities within other parts of Japan itself. So there are many pipeline projects. Okay, so then the next question, what is the rental yield on Alero projects rented out compared to your interest rate? If you compare the interest rate of Japanese yen, then of course there's a good headroom. On average, the net yield is about 5% for our Alero projects in Japan. Okay? After expenses, net yield. How does a natural disaster like earthquake affect business plan? Are there properties in a natural disaster prone zone? I mean, if we are afraid of earthquakes and so forth, then we should completely exit from many parts of the world. We should not even be doing any business in Japan at all. We all know that Japan is a earthquake-prone zone. It has many earthquakes within a day, some big, some small. But because of this, the building requirement is very stringent in Japan, and all our Alero projects, especially, they can withstand earthquake up to a certain level. And even for the 311 earthquake in 2011, our residential project at that point in time, we have different sets. They were still standing. Okay, the whole of Tokyo is still relatively unscathed. So as a whole, I think Tokyo maybe is not so much earthquake zone prone. Then of course people are saying that Mount Fuji is due for eruption, so you can also bring that as a risk. But as a whole, I think the property that we develop are able to withstand most of the earthquake that were to take place in Japan. What is the lifespan of a vessel? You have 3 vessels, 29. What is the purchase price? What is the value of these ships today? If I were to tell you all these things, I probably could not sell my ship. Okay, so what is the lifespan of the ship? We have 3 vessels, 29,000 deadweight ton built in 2011, 2012. What is the purchase price? What is the value of these ships today? Okay, what is the price of a new ship? If you were to sell your house, you don't go and tell your buyer how much you buy it for, right? How can you negotiate a good selling price if you tell them, hey, this is the price I'm going for? You go to a shop, you want to buy something. You don't go and ask the owner, hey, how much do you buy this for? You don't go to the market, you look at the fish, you ask them, hey, uncle, how much you buy this fish for? Nobody will tell you your cost because you will then jeopardize the selling price that you have. So therefore, I can't tell you all these details. But like I mentioned, what we look at is the net book value, because as we use it, we depreciate it, the cash that we receive, okay, add on to our chartered income. So we cannot just look at purely what is the cost. The borrowings are being paid off. So the 2 main criteria really is the net book value must be lower than the proceeds, sales proceeds, and the proceeds must be able to cover the borrowings. These are the two main criteria. So what is the price of new ship? I think I mentioned that before, earlier in the Q&A. So the vessel price of these 3 ships, I mentioned about the latest ship that we sold, about 9 million. I think sales price between 9 to 11 million would be the kind of range of such second-hand price that we can see in the market. Every vessel is different. It's just like your car, how much you can fetch, depending on the engine condition, depending on how you have maintained it. So I think this is roughly the range of the price of these ships on our portfolio. Next, I note that you mentioned that you borrow US dollar even though your assets are in Japan. Can I confirm that you do not believe or practice natural hedging? No, I think you misunderstood me. I say that the vessels are in US dollar, we borrow in US dollar. The Japan, because the revenue are in Japanese yen, we borrow in Japanese yen. That's the natural hedging. So I'm not sure. I'm not sure what your question. Okay, yeah. So maybe I move on. Property in Hong Kong. This is not the. What about Japan property outlook? Within domestically, Tokyo Tokyo itself, the population is increasing because many professionals have come to Tokyo to work. So the Tokyo property market, it is very robust, still very strong. That's why our Alero projects are mainly focusing in Tokyo itself. Many foreign investors also taking advantage of the low interest rate and low Japanese yen, go into Japan, mainly in Tokyo, then they branch out into Osaka, the second tier city. So when we look at opportunities, we do of course focus on Tokyo because our office is in Tokyo. We also focus on areas where potentially there could be some upside in terms of businesses. So for example, we bought land in Furunano, in Hokkaido, because I think many Singaporeans like to go ski, like to go to Hokkaido to ski. So the skiing resort area in Furunano, in Niseko area, the prices are actually going up. So we have also have some exposure. We bought some land potentially to hold it for a few years to maybe develop into some properties later. Yeah. So these are the action that we are taking. So Japan property wise, Tokyo is doing well. The other parts, we have to be very cautious. Yeah. Can you give a sense of the risks and challenges in the next 5 years with shipping business that you are in? How do you mitigate it? Okay, a sense of the risks and challenges in the next 5 years and how do you mitigate it? Now, if you look at our portfolio of vessels, okay, we are in a very unique and good position now. If you look at any normal shipping company, when they sell a vessels, they have to quickly buy new vessels to replenish to get a charter income. We have other sources of revenue from Japan. Hong Kong, of course, not doing so well now, but we do have other sources of revenue for arrangement deals, sales and purchase, and so forth. So we don't depend solely on our charter income. But having said that, we do have opportunities to buy vessels from our joint venture structure. Now, in terms of the whole risk for shipping, is the uncertainty of what would be the norm or the environmental standard for ships in terms of technology, in terms of specification. I think this is one of the main risk and challenge for the shipping in general. And we see that European countries have started imposing carbon tax on shipping companies in order to ensure that they meet certain requirements. So the sustainability factor, climate change factor is actually a very big area that challenge the shipping market as a whole. And that's why the supply of vessels is actually low. So how do we mitigate it? Okay, on a short run, we want to make sure that our 38,000 deadweight ton vessels, they are still in compliance with the environmental requirements. We have a healthy fleet of 38,000 deadweight ton ships and maybe the 58,000 Supramax. And going forward, we are studying very carefully what should be the specs of vessels that we should have exposure. And waiting for the good chance, because we can wait, to buy the right vessels. So this is what we want to do. Just like, if you sell a stock at a high price, you don't want to immediately go into the market and buy it back at a high price. You wait for opportunities where the price come down. So this is what we are doing. And that's why we say that we are asset manager and not a shipping company or a property company. So in terms of shipping, this is the challenge. These are the challenges that we have, and these are the plan or strategy that we are adopting. Of course, within itself, in terms of how we manage the charter, we do mix around our newer ships with longer charter, with stronger charterers. Okay. So last one, if I'm not wrong, Japan is going to exit zero. How does it expect to impact your business there? It works both ways, right? If you exit zero interest, basically now if you see in the morning, they are going to have more increase in the salary of Japanese employees. In Japan, basically the employees have no increase in pay for many, many years unless you really get promoted or something like that. So you don't just look at one factor, right? It goes both ways. When you exit the zero interest rate, Your other factors, meaning your inflation and so forth, may also come in. So when it comes to property markets, the prices may also go up. So the price of the properties in our portfolio may also go up. So these are some of the factors we have to consider in totality and not just one particular factors. Okay. For the vessel, why can't be financed by Japanese yen loan, which are lower rate? Okay, I think I explained this just now, but let me reiterate. Okay, so assuming now you have I have a 5 million US dollar borrowings that I need to refinance. Okay, 5 million US dollar I need to refinance. Now, if I were to borrow from Japanese yen at these current rates, maybe 150, okay, I need to borrow 750 million Japanese yen, okay, in order to finance this. Right? So I borrow 750 million yen at this current exchange rate. Yes, I pay a lower interest. Now, the previous question is Japan is going to exit zero interest. That means the interest rate is going to strengthen. If it strengthen from 150, if it strengthen from 150 to I don't know 120 and so. So now I have to use more US dollar to buy exchange to Japanese yen to pay off the loan. So in the end, it doesn't work out also. So it doesn't work this way, okay? And I'll be receiving my uh, income in US dollar, then I have to translate to Japanese yen. There could be some FX element as well. So just now there's another participant, right? He asked me, why don't you do natural hedge? So these two are contradictory, you see. So it doesn't really work this way well. So previously when Japanese yen was stronger, we did have some Japanese yen borrowings. And then when Japanese yen weakens, we are able to use US dollar to buy more Japanese yen, right, to pay off the loan. So that actually works in our favor when you borrow in Japanese yen and the Japanese yen weaken. But now we know that Japanese yen is going to be strengthened. And if you borrow Japanese yen now and it's strengthened, it's actually detrimental to you. So it is actually not a good time to do it right now. Yeah, I think that will be the last question, Alina. Yeah.
Okay, sorry we overshot a little bit because we have too many questions. Well, thank you, Mr. Lim, for a very informative session and for patiently going through all the questions that we have. So for all the participants out there, I hope you enjoy the session. If you like the content, maybe stay tuned for our next webinar. Okay, I guess that's all. I'm not going to take up too much time of everyone. So thank you for coming, and we'll see you next time.
Thank you.
Thank
Thanks.
you.